Hello, hi guys. How are you? Hope you people are doing well. Even I am fantastic. So, in the today's class, we will be discussing amendments that are applicable for CA final audit Jan 2026 attempt. Whether there are lot of amendments, see, there are not much amendments. There are just 5 small amendments. So in the recent RTP that the institute has issued for Jan 2026, in the first 2 pages of that RTP, you can find some amendments that are applicable for Jan 2026. Those are nothing but you have 3 small amendments in NBFC chapter. I guess still none of them have joined. Students have not yet joined. Okay. So if you see in the NBFC, there are 3 small amendments, and in the professional ethics chapter, there are 2 amendments. So these 5 amendments we will be discussing now in the today's class. Okay. Oh, actually, I told the live at 11 o'clock, but I started at 10:59 itself. Okay. So yeah, let's start with the first amendment from the chapter NBFC. So if you see in the chapter NBFC, they have given the definition for NBFC, microfinance institution. Earlier in our study material, we were just having this term NBFC MFI, microfinance institution, but there was no specific description about what is meant by a NBFC microfinance institution. Right now, they have given the definition of NBFC microfinance institution also in the syllabus. So let us see the definition of microfinance institution. So NBFC MFI means non-deposit taking NBFC. So the first requirement is that for a NBFC to be called as a microfinance institution, first of all, it should be a non-deposit accepting NBFC, and which has a minimum 60% of its total assets netted off by intangible assets on an ongoing basis deployed towards microfinance loans. What is meant by this? So, of the total assets that the NBFC is having, okay, all the assets excluding intangible assets. Okay, so total assets excluding intangible assets, 60% of this should be deployed towards giving loans to giving loans in the form of microfinance loans. Then you will call such a NBFC as microfinance institution. Got it? So of the total assets, 60% should be in the form of loans as microfinance loans. Got it? Then you will call such a NBFC as microfinance institution. Now you can get a doubt, sir, what is meant by microfinance loan? See, if the value of loan given is less than 3 lakh rupees and there is no collateral for the loan, if these two conditions are satisfied, then you will call such a type of a loan as a microfinance loan. However, the definition of microfinance loan they haven't given in the book, but this is the definition of a microfinance loan. Got it? So loan amount given by NBFC should be less than 3 lakhs and it should have accepted no collateral for that loan. Then you will call such type of a loan as microfinance loan. So for NBFC, if 60% of its assets are deployed in these microfinance loans, then you can call such type of NBFC as a NBFC Microfinance Institute. Understood? So as defined under RBI Regulatory Framework for Microfinance Loans Directions 2022. So I guess you are clear with the definition of NBFC MFI, NBFC Microfinance Institute. Next, so this is the definition that they have given. Now, if NBFC fails to deploy 60% of its assets in the microfinance loans continuously for a period of 4 quarters, that means continuously for a period of 1 year, if NBFC doesn't deploy 60% of its assets in microfinance loans, then NBFC has to approach RBI with a plan. You will call such plan as a remediation plan. So RBI told that, see NBFC, in order to classify you as NBFC microfinance institution, you deploy 60% of your assets in microfinance loans, then I will give you the classification of NBFC MFI. I will give you the status of NBFC MFI. Now, if the NBFC fails to keep 60% of its assets as microfinance loans continuously for a period of 4 quarters, then it is not satisfying the criteria put by RBI, correct or not? In such a situation, NBFC has to approach RBI with a remediation plan. Now, what will be there in this remediation plan? In this remediation plan prepared by NBFC, it should mention why it was not able to ensure 60% of assets in microfinance loans and how it is going to fix this, what future action it is planning to do to ensure this 60% in microfinance loan, and by when it will achieve this target. Understanding? So by including all these aspects, NBFC has to approach RBI. You will call that plan as remediation plan. Got it? Now, once the NBFC approaches RBI with this remediation plan, RBI will go through that plan. After going through that plan, if RBI feels that yes, okay, NBFC will be able to achieve its target within a reasonable time, then it will allow that NBFC to be in the status of NBFC MFI. Otherwise, the RBI will cancel the status of a microfinance institute that has been given to such NBFC. Understanding? So see, if NBFC Microfinance Institute fails to maintain the criteria specified in the above paragraph for 4 consecutive quarters, that means for continuously 1 year, then it shall approach RBI with a remediation plan for taking a view in the matter. So who will take the view in that matter? RBI will take the view in this matter. Okay, by going through the remediation plan, RBI will decide whether to continue its status as a MFI or to withdraw its status from MFI. Got it? This is the first amendment from NBFC with respect to Microfinance Institute. Understood? Yes. This is the first amendment. Next, second amendment is also with respect to NBFC chapter only. This second amendment, this is not that much important. They just have made reference to particular new directions issued by RBI. If you see in this PDF, whatever you find in the green color, that is the amendment. Okay, whatever is there in the blue color, that is not an amendment, that was existing earlier also. Got it? Now, if you see with respect to amendment number 2, so we know that NBFCs, they have to maintain the minimum capital requirement, right? Tier 1 capital, Tier 2 capital, we'll call them, right? So now the requirement is Tier 1 capital and Tier 2 capital, it should be 15% of risk weighted assets, right? There is a particular risk weight that is given for each asset. All this was there earlier also. Now what is the new one that is introduced? See, with respect to NBFCs that are primarily engaged in giving loans against gold jewelry. See, NBFCs that are primarily engaged in giving loans against gold jewelry, for them a new guideline has been given. They have to comply with new directions. See, what is that? So NBFC primarily engaged in lending against gold jewelry, such as loans comprising 50% or more of their financial assets shall maintain minimum Tier 1 and Tier 2 capital of 12%. This was there earlier also. Okay, NBFCs, if 50%, more than 50% of their loans are given as gold loans, then they need to maintain Tier 1 capital of 12%, right? Of aggregate risk weighted assets of on balance sheet and risk weighted asset of off balance sheet. See, on balance sheet means the assets that are present in the balance sheet will be on balance sheet. Off balance sheet means the liabilities or the assets that are not present in the balance sheet, but they are disclosed as a disclosure. Like for example, if you have given any guarantee, guarantee is a off balance sheet item. Letter of credit is also a off balance sheet item, right? All those things, they will come under off balance sheet item. So now these NBFCs which are majorly into giving loans against gold, they have to, in calculating these on balance sheet and off balance sheet items, see the treatment to this is a amendment. This is a newly added one with respect to these NBFCs that are giving loan against gold jewelry. So the treatment to on balance and off balance sheet assets for capital adequacy shall be provided as per the directions respectively. Okay, so how to calculate on balance sheet, how to calculate off balance sheet, there will be separate guidelines that will be given, and these NBFCs shall also adhere to provisions of directions on treatment of deferred tax assets, deferred tax liabilities for computation of capital. See, what are the complete directions with respect to deferred tax asset, deferred tax liabilities is not there in the syllabus. They have just given that reference that these NBFCs, while calculating their on balance sheet and off balance sheet items, they should also consider the directions given with respect to these deferred tax asset, deferred tax liabilities. That's it. Just reference has been introduced. Reference to these directions is introduced in the syllabus. The complete directions is not introduced in the syllabus. Understanding? So this is not that much important. Just a reference is added. Second one is also similar. A new reference is added. Let's see. These NBFCs shall also ensure compliance with instructions issued by Reserve Bank of India lending against gold and silver collateral directions 2025. So recently in June 2025, RBI has issued these directions. RBI lending against gold and silver collateral directions 2025. So all the finance institutions which are giving loans against gold jewelry, they have to comply with these directions. So the NBFCs which are giving loans against jewelry should also comply with these directions. So what will be there in these directions? Various rules and regulations that has to be followed by NBFCs with respect to giving loans against the gold jewelry will be there in that directions. Got it? Like how much minimum margin has to be kept up against the gold jewelry that you are giving, and what precautions has to be taken. Like this, various rules and regulations will be there. Got it? So I was just going through those directions. While going through those directions, I just found one point. So one interesting point, I'll share that point with you. So generally, if you go to bank or NBFC, and ask a loan for construction of house, or for purchase of any vehicle, or for purchase of any plant and machinery, or for purchase of any asset, they will give you the loan, correct or not? So you can take the loan from bank or NBFC for purchasing any type of asset, right? But if you go to the bank or NBFC and ask a loan for purchase of gold, you wanted to purchase a gold, and for that purchase you are asking a loan from the NBFC or or the bank, they will not give you loan, because these directions, Reserve Bank of India, lending against gold and silver collateral directions, they will prohibit giving loan for purchase of gold. See, they will give loan by keeping your gold as security, but they will not give loan if you want to purchase gold. Understanding? So that is one of the interesting point that I found in these Reserve Bank of India lending against gold and silver collateral directions 2025. So these NBFCs should also follow with these directions and also these directions. Got it? This is also a minor amendment that has been added. Next, amendment 3. So amendment 3 also very minor amendment, not at all just a small amendment. If you see in the NBFC chapter, for the assets, they have given some risk weights, correct? For each type of asset, there is some different percentage of risk weight that has been given. Now, if you see in the other assets, there was others to be specified, they have mentioned, right? In that to be specified, now they have added ROU asset. Now, what is this ROU asset? ROU asset means right of use asset. So whenever you take any property on lease basis, you will get a right to use that asset, correct or not? So on such a right of use asset, what should be the risk weight that you have to apply? Generally it is 100% is the risk weight that you need to apply for calculation of that capital of 15%. You will require risk weighted assets. So for that purpose, already in our book the risk weights for different assets are there, right? So in the list of those assets, they have also added ROU asset, right of use asset. Got it? Yes. So those are the 3 amendments from NBFC chapter. Very minor amendments, right? Yes. Next, amendments from professional ethics. Now, if you see in the professional ethics, there have been an amendment in one particular clause, and a new clause has been added in the second schedule part 2. A new clause has been added. So now let us see those 2 clauses. So firstly, professional ethics amendment number 4, clause 9 of part 1 of first schedule. See, this clause, it was there earlier also, right? But a minor amendment is made in this clause. First of all, we'll see what this clause is. So a chartered accountant in practice will be deemed to be guilty of professional misconduct if he accepts an appointment as auditor of a company without first ascertaining from it whether the requirements of section 139 to 140, earlier it was 139 and 140 only. Now they have added section 141 also. See, section 139 to 141. So whenever you have been appointed as auditor of a company, you need to ensure that the requirements of section 139 to section 141 of the Companies Act have been complied while appointing, or any other law pertaining to appointment of auditors for the time being in force. We will see what this section 141 is, we will see. Okay, so basically the requirement is earlier, I'm just explaining you the change. Earlier, when you are being appointed as an auditor, you need to ensure compliance with section 139 and 140 of the Companies Act. Now, after amendment, you need to ensure compliance with section 139, 140 and also 141. Okay, now if you see section 139, it deals about appointment of auditor, right? So appointment of auditor in case of government company, non-government company, first auditor, subsequent auditor, all these provisions are there in 139, which we already discussed, right? Which is not an amendment basically, which was there earlier also. Next is section 140, deals with removal, resignation of auditor, giving special notice. This one also there earlier. Now the reference to section 141 is made now through the amendment. So what section 141 deals with? So eligibility, qualifications and disqualifications of auditor. So if you wanted to be appointed as auditor of a company, you need to satisfy certain qualifications and you should not have some disqualifications. Only then you will be eligible to be appointed as auditor of company. So if you get appointed as auditor of a company, even if you are disqualified, then you will be deemed to be guilty of professional misconduct under clause number 9. Understood? Now what are the disqualifications under section 141? We need to know that also. See, in the book, in your study material, this what this section 141 says, that has not been given, but in the clause reference to 141 is made. If any non-compliance under 141 occurs, you need to identify it. So for that purpose, you should know what is written in the section 141 of Companies Act, correct or not. So now we will see section 141 of Companies Act 2013. So basically it deals with eligibility and qualifications to be appointed as auditor. So first of all, we will see the eligibility requirement. So if you wanted to get appointed as auditor of a company, you must be a chartered accountant, right? That is a basic requirement. And a firm or LLP with a majority of partners. See, if the company wants to appoint a partnership firm or LLP as its auditor, then such a firm or LLP should have majority of partners as chartered accountants in practice, right? Next, where a firm including LLP is appointed as auditor of a company, partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. So if the firm is appointed as auditor of a company, then the partners of the firm will be eligible to sign on behalf of the firm, right? These are the eligible requirements to be appointed as auditor of a company as per section 141. So if you are a chartered accountant but not in practice and you have got appointed as auditor of a company, then you will be deemed to be guilty of professional misconduct under clause number 9. Understanding? Next we will see the disqualification. See, these are the eligibility requirements. Next, disqualifications. That means if the chartered accountant or if the person possesses these disqualifications, then he cannot act as auditor of the company. So we will see what are these disqualifications. So firstly, a body corporate other than a LLP registered under LLP Act 2008. So that means a company cannot be appointed as auditor. A body corporate other than LLP cannot be appointed as a auditor of the company. So only individual or partnership firm or a LLP can be appointed as auditor of the company, but a body corporate, which is a company, cannot be appointed as a auditor of the company. Got it? Next, this is the first disqualification. So if you are doing practice in the form of a company, first of all, you will not be allowed to do practice in the form of a company. Then if at all you are having practice in the form of company, and you should not be appointed as auditor of the company. Okay, if at all you get appointed as auditor of company, then you will be deemed to be guilty of professional misconduct, because nowadays institute has allowed the chartered accountants to do practice through company form, provided they provide only consultancy services, not the assurance services. Okay, for other than assurance services, you can open up a company and start the practice. You should not provide assurance services to that company, right? Next, an officer or employee of the company. So a person who is employee of the company cannot act as auditor of that particular company. This is also a disqualification. So let's say you are a chartered accountant and you have joined as employee of a particular company, and you cannot be appointed as auditor of that company. Understanding? Because you are already officer or employee of that particular company. Next, a person who is partner or who is in employment of an officer or employee of the company. So a person who is partner or who is in employment of these people. Okay, so let's say Mr. A, he is a chartered accountant. He is a employee of B Limited. Understanding? Now there is a Mr. C who is a partner of Mr. A, or there is a Mr. B who is a employee of Mr. A. Then these people also cannot be appointed as auditor of the company. Understood? Yes. Next. So all these are the disqualifications to be appointed as auditor of the company. If you possess these disqualifications and you get appointed as auditor of the company, then you will be director, top management people. Yes. So you will be not eligible to be appointed as auditor of the company. Even though you are possessing these disqualifications and you get appointed as auditor of the company, then you will be deemed to be guilty of professional misconduct under clause number 9. Understanding? Because section 141 reference is also added. Next, a person who, or the fourth disqualification, a person who or his relative or partner. So a person means, let's say Mr. A is a chartered accountant. He or his relative, okay, so he or his relative or his partner, okay, his partner. Now here there will be three things we will be discussing about. These people have interest in the company. These people have become indebted to the company, or these people has given guarantee to any third party who has taken loan from the company. Now if Mr. A or his relative or his partner has some interest, that means they have invested in the company, or they have taken some loan from the company, or they have given guarantee to some third party to the company. In these three situations, these people cannot be appointed as auditor of the company, but there are some exceptions. What are the exceptions? So interest, with respect to interest means having some financial interest in the company in the form of investment. So relative is there na, he can hold investment up to 1 lakh rupees of face value. So for relative in interest or investment up to 1 lakh rupees of face value is allowed. So even though the relative is holding the investment or interest in the company up to 1 lakh rupees, Mr. A can be appointed as auditor of that particular company. Got it? Next, indebtedness. For indebtedness also, they have kept a limit of 5 lakh rupees. You can see. So in excess of 5 lakh rupees for indebtedness of the company. So you can borrow from the company up to 5 lakh rupees, and even then you can get appointed as auditor of the company. Got it? Next, guarantee. Now you have given guarantee to some third party who has taken loan from that company, and that guarantee amount up to 1 lakh is permitted. Okay, even though you have given guarantee up to 1 lakh, you can become auditor of that company. Understanding? So this is the disqualification. if you get interested in the company, indebted to the company, or given guarantee to the company. Got it? So once we'll go through this. So a person who or his relative or partner is holding any security of or interest in the company or its subsidiary. See, you should see not only in the company, all whatever the requirement I have told you, that is applicable in the company, in its holding company, in its subsidiary, in its associate, and also subsidiary of the holding company. Okay, whatever the requirements, the indebtedness, the interest, the giving of guarantee, all these three things you should see not only in the particular company in which you wanted to get appointed as auditor. You have to check in all holding of that company, subsidiary of company, associate of that company, and subsidiary of holding of that company. Understood? Yes. See, in the company or its subsidiary or of its holding or associate company or subsidiary of such a holding company. Got it? Yes. So you should not be having any security or interest in this all the companies. If yes, you have any security, you cannot get appointed as auditor of the company. Even after holding security, if you get appointed as auditor of the company, you will be deemed to be guilty of professional misconduct under clause 9. Yes. However, there is an exception to the relative. He can hold up to rupees 1 lakh rupees, that to face value. You need to observe this. Understanding? Face value, not the market value. Next, is indebted to the company or its subsidiary. This is also subsidiary, holding, associate, subsidiary of such holding in excess of 5 lakh rupees. The same thing that we have discussed. Next, has given a guarantee or provided any security in connection with the indebtedness of any third person to the company. That means some third person has taken loan from the company, and for that third person you have given the guarantee to the company. Got it? So to the company or its subsidiary or holding or associate or subsidiary of such holding company in excess of 1 lakh rupees. Got it? Yes. So these are the, this is the fourth disqualification. So if you possess this disqualification also, you cannot become auditor of the company. So having these disqualifications, if you become auditor, again you will be deemed to be guilty of professional misconduct under clause number 9. Next, another disqualification: a person or a firm who, whether directly or indirectly, has a business relationship. Business relationship means you and the company in which you wanted to get appointed as an auditor together doing a particular business, then it will be deemed that you are having a business relationship, right? So if you having such business relationship, you should not get appointed as auditor of that particular company. So that is the fifth disqualification: a person or a firm who, whether directly or indirectly, has business relationship with the company or its subsidiary or its holding, associate, subsidiary of such holding company or associate company of such nature as may be prescribed. Again, this requirement also you should see for holding, a subsidiary, associative, holding, subsidiary of holding, and associate of holding. Okay. Next, seventh disqualification: a person who is in full-time employment elsewhere, or a person or a partner of a firm holding appointment as its auditor, if such person or a partner is at a date of such appointment or reappointment holding appointment as auditor of more than 20 companies. So if you being a chartered accountant already doing some full-time employment elsewhere, then you cannot get appointed as auditor of some company, because if you are in full-time employment, you will be deemed to be not in practice, right? So if you are in full-time employment, then also you will be disqualified from becoming auditor of the company. Next, you are in practice only, you are doing practice only, but at any point of time, if you have been appointed as auditor of 20 companies, okay, if you are acting as auditor of, no, business relationship does not include any normal sale or purchase transaction. See, if auditor, he has purchased some goods, some services from the company. That goods or service in the normal course of business. Okay, in the normal course of business, if you have purchased some goods or services, that doesn't become a business relationship. Got it? So normal sale and purchase of goods and services from the company doesn't attract this business relationship. Okay. So another disqualification is at if you have been appointed as auditor of 20 companies. Okay, you are acting as auditor of 20 companies. Then you cannot accept appointment of 21st company as auditor. So at any point of time, maximum you can act as auditor of only 20 companies. However, in the while calculating these 20 companies, certain companies has to be excluded. So what are the companies that has to be excluded while calculating these 20 companies? Firstly, you need to exclude one-person companies, and you need to exclude dormant companies, and you should exclude small companies, and you should also exclude private companies having a paid up share capital of less than 100 crore. So all these companies you need to exclude while calculating this limit of 20. Small company means whose paid up share capital is less than 4 crore and whose turnover is less than 40 crore. Then you will call it as a small company. Understanding? So at any point of time, you can get appointed as auditor of only 20 companies. More than 20 companies simultaneously, you cannot get appointed as auditor. This is also one of the disqualification. Next, a person who has been convicted by court of an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. See, the person, he has committed a particular fraud. Let's say Mr. A, he is a chartered accountant, he has committed a particular fraud. Let's say on 30 April 2025, he has committed a fraud. After committing fraud, case will be launched against him, and in the court, trial will be going on, and court has decided, court has convicted on some 6th of October 2025 that yes, Mr. A actually done the fraud. So this is the date of conviction. Okay, it is proved that he has done the fraud. So from this date till 10 years, he cannot act as auditor. Okay, from this date till 10 years, he will be disqualified to get appointed as auditor of the company. So in these 10 years, if you accept the audit of any of the company, you will be deemed to be guilty of professional misconduct under clause 9. Understanding? Yes. Next, final disqualification, a person who renders any service referred to in section 144 to the company. See, section 144 has a certain list of services which should not be provided by statutory auditor of company, like preparation of books of accounts, internal audit. Understanding? So all these services, list of services which are there in section 144 should not be provided by chartered accountant. If you provide by auditor of the company, if you provide these services, then you will be disqualified to be appointed as auditor of the company. Got it? Yes. 911. What is 911, Manjunath? Okay. So this is the 4th amendment. See, with respect to 4th amendment, the amendment is only that along with section 139 and 140, they have also added 141. This is the only amendment. In the book, they haven't mentioned what is the content of section 141, but we should know the content of section 141. If any question comes with respect to content of these things, then you should be able to identify that yes, this is discussed in section number 141, correct or not. So we have also discussed section number 141 with respect to this clause 9 of part 1. Got it? So this is the amendment number 4. Next, final amendment, amendment number 5. So in schedule 2 part 2, they have added a new clause. Till now there are only 4 clauses in schedule 2 part 2, right? Now they have also added a 5th clause. So what this 5th clause is, let us first of all read what this 5th clause is. So as per clause 5, and this second schedule, it is applicable both for member in practice and also member in service, correct or not? So the the second schedule part 2 is applicable for both member in practice, member in service, right? It deals with professional misconduct of a member who is in practice as well as member who is in service. So this clause number 5, it is applicable for both, right? That's what the understanding we will be getting, because it is introduced in second schedule, second part, right? Now let us read it and we will analyze it. So clause 5, as per clause 5, a chartered accountant shall be deemed to be guilty of professional misconduct if he acts as an auditor of a company. So this is also dealing with acting as auditor of a company in contravention of provisions of Companies Act 2013. So they have made a reference of complete provisions of Companies Act 2013. If you see the previous provision, clause 9 that we have discussed, only clause 130, section 139, 140, 141, only those 3 sections were referred, right? But in clause 5, complete provisions of Companies Act is being referred. That means, see, let us understand the difference between the previous clause 9 and this clause 5. So this clause 9 is there, na? This you need to check the compliance at the time of appointment. Understanding? So with respect to appointment, whether you have any disqualifications, whether all the procedure with respect to appointment is properly followed or not, all these things you need to check. If at all there is any contravention that has been made with respect to these things, you will be deemed to be guilty of professional misconduct. Now, after getting appointed, while doing the audit, you have to comply with complete provisions of Companies Act. That means whatever the reporting requirement that has been imposed by the Companies Act 2013, if you fail to do that, then you will be deemed to be guilty of professional misconduct under clause number 5. Understanding? So now, as per these schedules, if chartered accountant doesn't comply with any of the provision of Companies Act, he will be deemed to be guilty of professional misconduct under clause 5. So the reference to complete Companies Act has been now made in the clause number 5. Understanding? Sir, in case of exam, can we mention both the clauses? See, in case of examination, if they are asking about clause 9, the question will be specifically with respect to appointment. So for such questions, you need not refer clause number 5. Understanding? If provisions of 139, 140 and 141 has been specifically asked, you need not refer. Okay, if you remember, you can refer. There is nothing wrong, because it is dealing with complete provisions of Companies Act 2013, but not mandatory to refer. But if you remember the reference of clause 5, you can also refer clause 5 also. Understanding? It is not mandatory to refer both the clauses, but if you remember the reference of clause 5 also, you can refer it. There is nothing wrong in that, because section 139, 140, 141 is also provision of Companies Act only, right? Okay, yes, you can refer. So clause 5 acts as an auditor of company in contravention of provisions of Companies Act 2013. This is clause 5 part 2 of second schedule. So these are the complete 5 amendments that are applicable for Jan 2026 examination of CA final audit. Got it? So I guess you are clear with these amendments. If you have any doubts, you can ask in the comment section. Okay, I'll be ending this live. We'll meet you in the next live session. And yes, there are on 3rd of November the results will be out, right? The September 2025 examination results will be out, right? So all the best for the people who are waiting for the results. We'll meet in the next video. Until then, take care. Bye bye. See you.